Trying to cool a market that's just spiraling northwards to the heavens without much abatement. The government in China raising the tax on share trading, tripling it, as a matter of fact. Whoa. Sam, if this kind of stock trading volume keeps going, the government's going to make an oodle of cash from all these punters.
They sure are, but Bernie, their ulterior motive here is definitely trying to cool the demand for shares that we've been seeing over the last few months. In particular, Xinhua says the Chinese government has tripled the tax on securities trading. It cited the Ministry of Finance. China raised the stamp tax from 0.1% to 0.3%. It's effective from today. Xinhua said the higher tax aims to promote a healthy stock market. China's benchmark index has tripled in value in the past year. It's now trading at 48 times earnings, making it the most expensive in Asia. The rally has prompted central bank officials, former Fed Governor Alan Greenspan and Li Ka-shing, to warn the market may collapse. But many investors are not concerned. China has $2.25 trillion of household deposits sitting in banks. With low interest rates, that money has been earning less than the rate of inflation. That's encouraging savers to shift their money into higher yielding assets like the stock market. Chinese stocks rose to another record high yesterday, jumping over 2%. But we may see losses today. The Bank of New York index that tracks Chinese ADRs dropped 1% overnight. That's following news of the higher stamp tax on share trading. China Mobile and China Life were among the decliners. The US-listed shares of PetroChina and Sihanouk also fell. Now, for reaction, we are joined on the line by Peter Schiff, who tracks international markets. He is the president of Euro-Pacific Capital. Peter, thank you very much for joining us. How do you think the Chinese market will react to this news of the higher stamp tax on
Well, it'll most likely shrug it off. I mean, maybe it'll be weak initially, but you know, the whole thing is ridiculous. It's like if you're in a ship and it's sinking because you've got this gaping hole in the hull, rather than repairing the hull, you know, what China's asking people to do is give them, you know, teaspoons and try to bail out the water. You know, the problem is the tremendous growth in the money supply. I mean, that's what's causing the speculative bubble to begin with. That's what China needs to do. They need to rein in this money supply growth. But, of course, they can't do that and maintain this ridiculous pegged relationship with the dollar. They have to let the U.S. dollar collapse. They have to cut down on money supply growth and let interest rates rise and stop inflating. And that'll pierce the stock market bubble. And that'll be good for the long-term development and the health of the Chinese economy.
Do you expect any of these moves anytime soon, though? China seems unlikely to dramatically revalue its currency and is raising interest rates quite gradually. What are we going to see in the short term then to stem these gains?
I don't know.
The market's already doubled this year.
I don't know. You know, I mean, China's creating some problems, very similar. You know, if you go back to the 1920s, we went through the same thing, only the players were different. It was Great Britain that was declining economic power, and we ran a very inflationary monetary policy during the 1920s to try to prevent the British pound from collapsing. And that created the stock market bubble of the 20s and laid the foundation for the burst in 1929 and the ensuing depression. So now you have the same situation where China is aggressively inflating its money supply, blowing up a stock market bubble in order to prevent the U.S. dollar from collapsing. And, you know, they're repeating the same mistakes we did. They got to cut it off, and the sooner the better.
Letting that kind of scenario could lead to a complete mess, though, Peter, in this market. I mean, don't forget this is not a real currency. It is not a fully convertible currency. And this is the same message that the Chinese are trumping, as if you do that, then the whole country goes to hell hand over fist.
No, it's, you know, the Chinese yuan is more real than the dollar. At least it's backed by the products that the Chinese produce. We've got the phony currency. And when the dollar collapses, it's not a problem for China. It's a blessing. It's a problem for America. You know, the minute that the yuan can rise to its true level, the living standards will soar throughout China because the value of Chinese savings will go up, the value of Chinese wages will go up, and even if the stock market goes down, even if stocks go down, they're still going to be worth more in terms of purchasing power. It's the Americans who are in trouble. We're the ones that have to worry, not China.
All right, let me ask you this then, point blank. Right now, the yuan is valued at 760, something like that. In the spot market, in the synthetic forward market, it's at 7.2. What is fair value in your view?
Well, I have no idea. We'll have to find out. But I think it's not just 20 or 30 or 40% higher. It's going to be 2 times higher, 3 times higher, 4 times higher. I don't know. We'll find out. But I think the Chinese currency should be much higher to reflect the true productivity of Chinese citizens, and the dollar should be a lot lower to reflect the lack of productivity of our citizens.
Peter, we've seen warnings from Alan Greenspan and Li Ka-shing over the last couple of weeks that there is a bubble in China, that we're likely to see a decline. What do you make of all of this? Where do you see the market going over the next few months?
Well, I think it's probably likely to go higher over the next few months. And there's no question that there's a bubble, and there's no question it's probably going to get a lot bigger before it finally bursts. But I still think that the big transformation of wealth is going to be away from the United States, the American consumer, towards Asia, towards the Chinese, regardless of when the stock market eventually declines. But I think China's ascent to maybe global dominance or Japan would be a lot smoother if they stopped dragging all the dead weight of the United States behind them. They keep thinking that America is the locomotive of the world economy. We're not. We're the caboose. We're this giant dead weight that the world drags along, because all we're doing is consuming and borrowing while everybody else does all the difficult work, which is producing and saving. And I think the sooner that people over there come to realize this situation, that the better their economies will develop.
Okay, Peter, let you get back to your movie with your kid there. Appreciate your comments. Peter Schiff, always out with a colorful comment. There's also the author of Crash Proof, How to Profit from the Coming Economic